We're going to look at 16-4B, the statement of cash flows direct method. The comparative balance sheet for Martinez for December 31st is as follows, and it gives us our balance sheet. It also gives us our income statement and some additional data. Prepare the statement of cash flows using the direct method, presenting cash flows from operating activities. We're only going to do the first section here, okay? We're just going to do the cash flows from operating activities for this problem. So we start with our three-line heading, Martinez Inc., Statement of Cash Flows for the year ended December 31st, 2019. We're going to start with our heading, Cash Flows from Operating Activities. Okay? Excuse me. We're going to look at our little cheat sheet here. Cash received from customers. So we're going to take our sales. If we had a decrease in accounts receivable, we're going to add that decrease. If we had an increase, we're going to subtract it. And that's the cash we received from our customers. So if we look at our accounts receivable, there was $914,400 and then $992,640, so we had an increase. We're going to grab some scrap paper and take those two numbers and subtract them, and we get an increase of $78,240. We're going to take our sales number of $4,512,000 and subtract that $78,240. And we get $4,433,760, and that's the amount we're going to use on our statement of cash flows. So on our statement of cash flows, we have cash received from customers, $4,433,760. Now, if we look at our notes, it says the next thing is going to be less cash payments for merchandise. So we're going to take the cost of merchandise sold, plus or minus the increase or decrease in inventories, and we're also going to add or subtract the increase or decrease in accounts payable. Okay, so let's look at inventories first. If we look at our, I'm sorry, I'm having issues here. If we look in our book at inventories, we'll see we had $1,363,800. and then $1,394,000. So that was an increase. So we're going to add that. And then accounts payable was also an increase between $966,600 and $1,080,000. So we are going to subtract that. So we're adding the change in inventories, subtracting the change in accounts payable. So we figure out the difference in the inventory was $30,600. Difference in accounts payable was $113,400. Start with our cost of merchandise sold, add our inventories, subtract our accounts payable, and we get $2,269,200. We're going to take that number and put it in our statement of cash flows. Cash paid for merchandise, in parentheses, $2,269,200. Okay. The next one is cash payments for operating expenses. So we have operating expenses other than depreciation. And then we're looking at the decrease or the increase in accrued expenses payable. So if we look over here, we find our accrued expenses payable went from 79 to 67, so we had a decrease. Go to our scrap paper. We had a decrease of $11,400. So we take our total operating expenses, $1,344,840, add our $11,400, and we get $1,356,240. So this is the number we're going to take to our statement of cash flows. Cash payments for operating expenses, $1,356,240. Since we were doing less, all of this, we got one more. Cash payments for interest. If we look at our book, we have no interest. So we're going to jump down here to cash payments for income taxes. Take our income tax expense, plus or minus our income tax payable. If we look in our book, we have no income tax payable. We can look here in our liabilities. Income tax payable is not listed. It tells us down here our income tax expense is $299,100, so we're going to use that number as is. Cash payments for taxes, $299,100. We're subtracting all of these numbers, and we get $509,220. So this is our net cash flow from operating activities. A different way to do it than the other method, than the indirect method. Some people say this is easier. Some people say they like the other one because they can see all the details, where this one just gives you the final numbers. You know, it all depends on how much information the manager is looking for. Okay. And that ends problem 16-4.